Robert Maltbie with Maltbie's Minute on the Market. Pretzel logic. It's a market turned upside down. This would summarize the market since it bottomed in February. Inside out, upside down. Laggers lead. The market has reverted back to the high end of the range from an oversold short covering rally. Our market indicators have bounced around between negative, neutral, and slightly positive, taking the market from bad to ho-hum to rally within 3% of the all-time high. 3 psychological influences have led to this. 1, the hawkish Fed call earlier this year for 4 rate hikes has turned into just 2. 2, the dollar has weakened in the midst of this Fed dovishness. 3, European banks and the Euro Fed have spun negative rates to be good and up their quantitative easing spigot. And with oil markets sensing a bottom, they have rallied sharply, nearly 50%. Consequently, unless you were deft enough to go 100% long at the bottom, sell everything that was good and buy all the beaten up stocks for the short cover rally, you would be in the bucket like over 90% of the active managers again this fund. Many big name hedge fund managers are having dreadful years, down 20-25% at this juncture. Unhappily, we are also underperforming. Meanwhile, our indicators are sheepishly bullish, a sheep bull. Our technical indicators have turned positive, as have our liquidity indicators. Our monetary policy indicators remain fairly and barely positive. All moving averages have perked up above their 200-day resistance level, while the rally volume has been less than enthusiastic, let's say, at best. Our negative indicators are market sentiment, valuation, and earnings momentum. Sentiment, obviously, with rising tides, lifts all boats. Market pundits are much more bullish. Not good. During this rally, valuations have risen back to 18 times earnings, which are at the upper end of the historical scale. Also not good. Finally, let's just say earnings, the most important long-term driver of the market, have become negative. Earnings momentum is looking to be down again for the 4th quarter in a row, this time the worst quarter since the bearish bottom in '09. We think this is one of our more suspect bullish readings for our indicators that we've ever seen. It's been powered by a hollow oil rally. The amount of capital that it takes to turn around oil in the spot market is deceptively low, and really this can be engineered for far less capital than you might think. Think of it as a moderately valued tech stock and the money it takes to move that. That's your corollary. Nothing compared to the overall equity markets. So, a second major catalyst of this bull market has been mergers and acquisitions, and with the recent striking down or the Obama administration attitude that has caused the recent tax inversion related deals to reverse, Pfizer just called it off. We think an important driver of bullishness may have been just removed. So finally, there's a low bar for earnings this quarter. In fact, the beats may not be good enough this time to drive the market, since we're within a stone's throw of all-time high. Now for our stock of the month. It's a short called Gddy, $30 a share, and to that we say, no daddy. Firstly, revenue growth is declining, and the two dominant product market lines are not doing that well with mediocre profit margins. Gddy also has a very high debt load, which can cause some disappointments and volatility in the aforementioned mediocre reported margin business model that characterizes the domain management business. More importantly, insiders just sold through a public offering underwriting nearly $500 million of stock. Would they be selling now if they thought the stock was attractively priced? Also, the stock actually is priced for perfection. And with the combination of these very high multiples at a time when insiders are selling, when revenue is declining, and profit margins may be pressured by increased competition from the likes of Google, sell it now. We think it's headed down to $20 a share. Thank you. Visit our website for a complimentary report on Gddy at millennium-asset.biz. And remember, hope you like pretzels. It seems the market may be destined to grind it out a bit longer. This has been Maltbie's Minute on the Market. I'm Robert Maltbie. Thank you.